Good afternoon, gang. Good afternoon. It's not morning. Yeah, a bit later today. Apologies for that. Welcome to today's altcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and it's for educational purposes only. And now we've got that covered off. Let's jump into the altcoin charts and have some zero bullshit TA, shall we? So, I put out the request this morning a little bit late. I am a little bit behind schedule about what you guys want covering, and for some reason it's always the same coins. So either you guys are balls deep in these coins or you're just very curious about trading them. So today we are going to be looking at Sol, ETH, INJ, ARB or Arbitrum, whatever it's called, FETCH, and Link again. So effectively they're all just updates from last week. So here we go. So starting off with Sol. So this is obviously the channel that we had on last week, and we had two ideas. Either take out this pivot high and look for a pullback, see if it gives us one. In the end, it didn't really give us a pullback, it just continued up, absolutely fine. And option two was coming into the channel, which then also, depending on how high this comes, lines up with this pivot high. Now this pivot high is key. Obviously, remember when we came back here in the first place, every man and his dog was looking for this pivot high, and we had a lovely rejection from this point of control here. And since then, we've come down back to the channel low, and now we're back at the channel high. Okay, so realistically, what could happen here? If we start to see some low time frame breaker structure back inside this channel, then there's potentially a short trigger. Okay. A short trigger. If that's the case, then we'll be looking back down first and foremost to this volume cluster. And if this volume cluster doesn't hold, then it's back down to this macro range low, which is obviously the range from the overall top. Now, if we put this on log, you can see this a little bit clearer. It's this range here, the orange range. Okay. So if we come back in now, zoom back in. If this holds, then you'd be looking for that sign of strength to get a long trigger. If this fails to hold, then we can start looking for this to blast straight back through and likely coming into this sticky zone here. Okay. What do I mean by a sticky zone? Anyone that's watched us for a long time, you're looking where the volume is effectively. Okay. So if we throw on a volume profile, for example, from this impulsive move here, we can see point of controls down here. We've also got a high volume node down here, and then there's a little bit more volume down at the bottom. Okay. But this area is relatively thin. So one sticky zone, high volume node, bulk of volume. Sticky zone 2, high volume node. Okay, this is how we discover these high volume nodes and these sticky zones. So that's what I'll be looking for. If it starts to roll over, show some weakness on the lower time frame, then potentially short trigger with a take profit one there, and we then got to question what happens at this zone here. Okay, so there's a potential for a long trigger there. Now, what if this continues running up? Okay, well, if this continues running up, then first and foremost, these highs are a major target. These highs likely going to cause some form of pullback, but it's not guaranteed. So it's not just a case of leaving some limit shorts here and hoping for the best, because what could happen is it just blasts straight through. Okay, then it's a completely waste of capital. Okay, yes, if you've got risk management, you might still only lose 1R, but why not wait and see what happens afterwards? Okay. Not everything's a rush. That's where people really go wrong in trading. If this then continues up higher, the next major target will be coming in roughly around $48, $49. Okay, so that's to the upside, that's to the downside. Next, ETH. Now, ETH came up into the sticky zone. Now, this is a zone that we were talking about a while back, which is effectively this sticky zone here. We can see exactly where it stopped at this old point of control. Okay, so this is what we're talking about 2 weeks ago, maybe 3 weeks ago. Obviously, we broke out this local small range, so now we can get rid of this. And now we're consolidating here. So what happens? Well, if it starts to lose some structure, okay, taking out some kilos, then you've potentially got a short setup coming back down into this sticky zone back here. If that holds, then potential for a long trigger. If not, then we look down lower, and once again, then we start looking at this EQ/value area low. Effectively, this one big zone is this for me. One big zone. Now, my preference would be for it to come down and take out these lows. That'd be my preference. So that's where the resting liquidity is. But we trade what we're given, not what we want. Okay. So down here. Now, what if this continues up? Okay. That's the next question. If it continues up, okay, we've got the overall value area high above us here. Does this offer anything to work with? Yes, no. If no, then my preference once again would be coming back up towards range highs. Now at range highs, we've got resting liquidity above these highs. So maybe come up into this sticky zone, back down, then happy days, got a short trigger all day long. If that gives us no reaction, then we're going to start seriously contesting these highs. And if that doesn't offer a pullback, then we can start looking at higher prices. Okay, so that's the main zones for the downside, taking out these lows and ideally taking out these lows. And to the upside, range high effectively, range high. Keep it really simple. Don't overcomplicate things. INJ, next one. Look at this. Are we on standard scale? We are indeed. Right, okay. So last week when we did the video, we were rejecting off this EQ here, and we've continued to push up. Okay, so my plan still remains the same with this. My preference would be coming back up into the range highs and taking out that liquidity, because we've got liquidity above all these highs, potentially even this high here. So if we deviate out of here, then get back in, okay, showing some weakness, showing some market structure breaks, okay, then short trigger all day long, and then we're just back to playing this range, assuming the low holds. Okay, we can see and we can judge it in real time if it's going to hold or not. Okay, we don't know for certain, but that's what we can do. Now, if that offers nothing and it continues up, it blasts up, well, in that case, then realistically, then we're talking about this sticky zone here. So effectively, $18 up to $20, that'll be your next zone. And then if you start clearing that, then realistically, your chances for contesting the overall highs dramatically increases, I'll be honest. Okay, but for the time being, we've still got resistance above. So this would be my preference. If I was looking for a brand new short trade, and if I was looking for a brand new long trade, ideally I'd want it to roll over and see what the reaction is here if we get something. And if we don't get something and we just get acceptance back into the lower range, then we're looking back down at that EQ. That EQ should act as a bit of a sticky zone purely because there's a lot of volume across it. If we look at this, we can see here, got a lot of volume here, including the point of control just above it. Okay, so it's a bit of an area, a bit of a zone right there. Right, that's INJ. ARB, Arbitrum, whatever it's called. There's no real update to this. No real updates. It's still within this range. For me, like I said last time, ideally I'd want it to get back in here before looking for a long trigger, because I just want to see that strength. And once again, I reiterate, yes, that means I miss a move. I'd miss a move from the lows to the highs, and it's 33%. Oh my God, it's the end of the world. No, I trade smart. I don't trade FOMO. I've no concerns about missing a move. Okay, it just doesn't come with me at all. Okay, what I want to see is I want to see that strength. I want to see it get back into this range, and I want to see it get accepted back into this range. If it gets accepted back into this range, then we can start looking at potentially the EQ as a TP1. But until it gets back within this range, I have no interest in this coin at all. Okay, because it still, even though, yeah, we're coming back up, we've got a small little low time frame range here, it's just not showing major strength. Okay, so I want to see some interest in that coin before getting involved. FETCH, here we go. No idea where my LTA has gone, but okay, fair enough. Well, what we had before is we had this old range here. Okay. Old range here. Broken out off to the upside. Fair enough. Now we're coming into another sticky zone. Okay, so the big question is this a time to be chasing this thin move up? No. Not for me, anyway. If you want to do it, you do you. Absolutely fine. But for me, I've got no interest in chasing a move. So realistically, we're coming up into resistance. So what we've got is we've got what we call confluence. So we've got point of control and naked point of control lining up with a macro golden pocket. So within this zone here, I'd be expecting this to be fairly strong resistance. Now, does that mean it's definitely going to react here and then definitely roll over? No, it doesn't. We're playing the probabilities. What we know is that this should be a sticky zone. So the trick is, if we come up here and we start messing around in here and then it gives us a short trigger, then we take a short trigger. If it doesn't give us a short trigger, okay, remember there's one thing mapping out your areas of interest like I do, okay, but then the next thing is, do you get your entry criteria, your setup criteria? That's very different, okay? Finding your sticky zones on a chart is very easy. You can do it with very simple TA, but it's when it's within that sticky zone, does it give you an opportunity to take a trade? Yes, no. If yes, great, take it. If no, no problem, sit and wait, okay? So that'll be my first area of interest to the upside looking for fresh shorts. If that offers nothing and we continue above, getting above these highs here, which is roughly 50 cent, then there's no real reason why we're not going to contest these highs here up at around 60 cent for easy numbers. Start clearing that without a significant pullback. So that would be an option. But if you don't get a significant pullback then realistically we can look to start coming back up towards this old naked point of control now, which then you'd be looking at around 73 cents, 72, 73 cents. Okay, and then effectively you're back to trading this old range over here. So you can see this on the screen here, this old range. That's where you'd be back to trading. Okay, just level to level. Now, what if this starts to roll over? Well, if this starts to roll over, you can see this. There's not really any volume support. Okay, slight sticky zone here, perhaps. You know, some people will call this a daily order block, whatever you want to call it. You've got a potential for a sticky zone down here. Okay, it's a potential for a sticky zone. We can see it here. There's a slightly higher volume node here. If that offers something for potential trend continuation, there's a potential long trigger. If that offers nothing, then realistically we're coming back down towards a value area high. Likely it'll get defended in the first pass with it being the old range, but I'd be much more confident looking down at this zone here. Okay, just purely because this is a thin move, and we talk about this time and time again. You get a thin move if the thin move retraces, and again, it's all if. I'm not saying it will, but if it retraces, apart from this little cluster here, around 30 cents, there's not much volume support within that. So likely it is, it will roll back over towards its origin. Okay, so that's that. Pretty simple. Link, there's no real update for Link. We can see here that the old range fib tool is still doing its job, and it's still acting as resistance at this outer deviation. Okay, now the guys in the members know what my plan is on this and what I'm looking to do, and potentially where I'm looking to take a trade. So it is critical time here, but for me, it's still range bound. So even though everyone's got uber bullish because we've taken out this level, we've taken out 950 as a level, we're still range bound because we're still technically in the outer deviations of this range. So until we officially break out of this and start pumping up, I'm not going to get overly bullish because I don't get bullish at range high. Just like at range low, I don't get bearish. It's as simple as that. Okay, if it does break to the upside, then realistically, the next major volume cluster will be around $14, give or take. And then after that, then you're looking back up at your point of control. Now, this will vary depending on the exchange. Currently, I'm looking on Coinbase, and this will be roughly $15.60, give or take. Okay, but as I said, this point of control may be in a different location depending on what exchange you're on. More likely, it's going to be down in this zone here, which is major resistance for me. So if we do end up breaking up here, coming into this sticky zone and getting rejection, then yep, we've got a short trigger. Now, still, again, counter trend, looking at the daily, we're still in an uptrend, so we are counter trend, so we're not going to get greedy. We're going to lock in an early TP1. Okay, stops to entry, then that way, if it continues up and it stops us out, it's not the end of the world. Likewise, if it runs, then great, happy days. Okay. Now, what if this does start rolling over from where we are right now? Well, if we do start rolling over here, then your major area to be aware of is the old range highs, because bulls will likely defend this zone. Because they've had the breakout, they're all happy, we're going to the moon, all that good stuff, whatever the narrative is that they're pushing. So they'll likely defend this zone. So it's a big key zone, is this. If this holds, then yep, we can look for further price action. If this doesn't hold, then once again, thin move. If this comes down, gets back in here, thin move. Likely we'll visit back down here. So that's what I'll be looking at. But that's only if that doesn't hold. Okay. So that's Link, and that's everything. Right. Hopefully you've learned something today. If you have, don't forget to hit that like button. And if you're not subscribed, consider subscribing. And until next time, gang, as you were. Bye-bye.